Hello and welcome to Senior Focus. My name is Laurie, and today I'm excited to welcome Pam Riesenberg of Reliant Mortgage. Hi Pamela, how you doing?
Hi Laurie, how are you?
Doing well, thanks for coming.
Thank you.
So I want to talk to you today a little bit about some of the programs that you offer that are specifically geared towards seniors. That's sort of who we're targeting with this show. So what do you have that might be specifically beneficial for our senior population?
We have several programs, Laurie. We do reverse mortgage. We also do a HARP program, which is helping. It's the Home Affordable Refinance Program that Obama had helped put out, and for Fannie Mae and Freddie Mac owners of mortgages to help them in this need time that they were upside down. So I can go more into that if you'd like to.
Yeah, so how do those work?
So the Home Affordable Refinance Program, if there was a senior or someone who wasn't a senior yet that purchased their home before June 1st of 2009, and they were owned by Fannie Mae or Freddie Mac, which is easily looked up by, you just go to Google, you put in Fannie Mae lookup or Freddie Mac lookup, and you can put in some brief information, your name, last four of your social, find out if you qualify and if you're a match. And if you are a match, you're able to refinance even if you're upside down. So if you purchased your home for, let's say, $300,000 back in 2006, and today it's only worth $270,000. There is an unlimited closed loan to value, meaning that they can be unlimited upside down, doesn't matter what the percentage is, and they're still able to refinance and kind of hone in like everybody else is and take advantage of the low rates while they're still here. So it's a great product.
And so if I can back up a second, what's the difference between the Fannie Mae and the Freddie Mac?
They're pretty similar. They do have different qualifications. So when you run their automated system through the computer, Fannie Mae and Freddie Mac will give you different approvals sometimes, or different types where one customer may get approved with Fannie, may not get approved with Freddie. Sometimes it just depends on the product. Freddie Mac has a better product with non-occupant co-borrowers. Mm-hmm. So if a senior wanted to help out their child or someone, as a co-borrower, they could be a non-occupant co-borrower with Freddie Mac, where Fannie Mae doesn't allow it. So they're really pretty much the same, but they do have different qualifications.
One of the things I'm really aware of lately is the 55 and older communities cropping up, starting to see more and more of those. Are 55 and older communities, are those a different challenge in terms of mortgage?
They are a challenge within the association. So if the association is limiting certain amount of people that can come in at a certain age, if they're giving, sometimes communities will give 20% to less than 55 and older. Sometimes there's some deed restrictions within the complex, but condominiums in general are a different animal. So you have to really look into the association, make sure you're reading the condominium docs, make sure you're reading their bylaws and their budgets, and making sure that everything is up to par. If it's a brand new project, that's where it tends to be a little bit more not so forgiving, because they need to have so many sold, they need to have so much of that phase and common areas done before most banks will finance it.
Yeah.
But if it is already put together and there's a senior that wants to move into a 55 and older, it's a great project, pretty easy financing, 5% down typically. So even where they're condominiums, it's only a minimum of 5% down. Or there have been a lot of seniors that have been looking into reverse mortgage to try to get into the 55 and olders, where they're getting that money paid back to them monthly based on the equity, instead of having to pay out a mortgage every month. But it has to make sense for every senior. Not all reverse mortgages don't make sense for every senior. It really depends on their portfolio, of their specifics and how long they're going to stay there and how long they intend to want to live in 55 and older. Are they spending time here? Are they going south for 6 months?
Yep.
Things like that.
And I know in my work I have, especially in the past, worked with people specifically if one spouse was needing perhaps assisted living and the other spouse was intending to stay in their primary home, where they might be looking into reverse mortgage. Could you explain reverse mortgages in general a little bit more, just what they are and how they work?
Yeah, so what happens with a reverse mortgage is where you would typically go for a regular mortgage, you'd go take an application, obtain loan financing, take out a specific dollar amount for a loan amount, and then you would make a payment every month to the bank. In this situation, where it makes sense for really the most sense for somebody who's probably over 65, and they're going to obtain a reverse mortgage, meaning that they have equity already. So they have a house they probably either have paid off right now, and they want to move into somewhere else, and maybe they have a lot of equity. Well, they go into that house, and what happens is that they take a certain dollar amount, and the bank pays them every month. And there is a lot of little things that you have to be aware of, but there is counseling done by a specific company. So the senior will call this number and they will get counseled. They will go through all the different little things that they need to be aware of. They also will go through certain checkpoints with the loan originator. They will also make sure that it makes sense for them, and how much they're in need of each month or want to be receiving. And there's also, you know, if that person passes, then it's not going to be a burden on the rest of the family. Family doesn't have to take over that burden. So those are some of the small things that they'd want to look into and really ask questions about. You know, is this really going to affect my family? How is this going to affect my, you know, spouse, or who's on the loan? Things like that.
Right, right. Do you have programs that are available for people that are trying to reduce their debt? You know, one of the things you just talked about with the reverse mortgage is that ability to sort of get cash out based on the equity in your house. Are there other things people can do that have the burden of debt that might benefit them?
Yes, yes. You know, we have a lot of seniors and, you know, regular clients that come to us and say, you know, I really had a lot of debt from my child's college loans, or I had debt from, you know, helping them, you know, purchase their first home, or helping with grandkids or stuff like that, schools, private schools, stuff like that. So what we do is we assess the whole situation. We take out all of their debt, we do a budget, and we find out what they're paying out monthly, what they're comfortable paying, what is it that they pay for entertainment expenses that they're used to, so that they're not going to be living outside their means, or making sure they can still live the way they're used to living, or having fun and not having to be strict in the red line. So we look at all that, and then we also take a picture of how long are you going to be living here? Are you going to be making any major changes soon? And how much equity do they have in their home? So we're able to do a couple different evaluations of the home, find out how much equity they have in their home without doing an appraisal. So we do have an HVE, which is called a home valuation estimate, which we do just to kind of get that roundabout, so that they don't have to pay, you know, sometimes $375, $415 for a single family for an appraisal. And they can kind of find out how much they have in equity. We never want to put somebody over 80% so that they don't have to pay private mortgage insurance, unless it's really in a dire need. So we would assess that equity, figure out what it is they owe that's non-preferred debt, because a lot of people are paying non-preferred debt, and they're paying for, you know, credit cards at a certain percentage, or even car loans, and they're paying $400 or $500 a month in car loans, where we could reduce that debt monthly, allow them to have extra money, take the cash out, and then they don't feel it in their pocketbook. So they take some cash out to pay off that debt, and their payment is pretty much the same or less from what they were already paying. And now they have all that non-preferred debt. They have a little bit better tax write-off because it's all mortgage interest for now. Hopefully that stays, but yes. So we try to make sure that they're getting the best benefit.
And can you explain non-preferred debt?
Sure. So non-preferred debt, any interest that you're paying that you cannot write off is non-preferred debt.
Okay.
So credit cards, car payments, things like that.
Gotcha. And I have to ask you this question because it's a topic near and dear to my heart. Do you have programs that are specifically designed for our veterans? Anything to help them out?
We actually, we love veterans. We love them. I have been working specifically with certain veteran programs for about 13 years now. And a lot of veterans I find that have been in the Vietnam War or that are a little bit older and seniors don't realize they can still have some type of benefit to themselves in regards to housing. So they don't realize that they could use, even if they used it years ago, they still may have benefits left, or they can actually get renewed. So they can buy a house with 0% down.
Wow.
100% financing. They can receive 4% seller concession back towards closing costs, where the seller will actually pay their closing costs up to 4%. They also have no PMI. So,
I didn't realize that.
Yeah, they have no PMI. So, and if they were 10% or more disabled, they actually can waive their upfront premium, that mortgage government premium they charge for the veterans of 2.15%. So that can be waived if they do have some disability. But not having any PMI, not putting money down, and then also just even sometimes in refinance, they qualify for that. So if you're stuck and you don't want PMI, you can go up to 90%, even 100% in refinance as a veteran. And all you have to do is we get their DD-214, which every veteran knows that you can't. You may not know, Laurie, what a DD-214 is, but every veteran would know. So it is the certificate they get when they get get done with being in the service, and they get discharged, and it shows what they were discharged. So we get that DD-214, and we obtain a certificate of eligibility, and that certificate of eligibility shows us exactly what they qualify for. Wow. And then we can go ahead and assess that situation again and show them and kind of advise them what they might be eligible for and what they might want, and go over different options with them.
Great.
Yeah.
Wow. I had no idea there was that much available. That's nice.
Yeah. It's a great product. It's one of my favorites, actually. There's a lot of work that goes into veteran products, VA products, but I love it. You know, it's a lot of, as they say, the government's tough sometimes. They want a bunch of paperwork, but we try to make it as easy as possible. And
it's amazing to realize that there are benefits out there that people aren't aware that they're entitled to. And so that can be exciting to sort of let somebody know that, that's open for them. So there's so many of the different things that you're talking about. There's not only a lot of options, but it seems like there's a lot of trust involved too, and making sure you've got the person that is guiding you and helping you understand what is in your best interest. So if somebody's looking for a lender, if somebody's looking for a new mortgage company, I'm guessing the Yellow Pages is probably not ideal. What do you recommend? What is some of the criteria that you might suggest?
The first thing that I would probably do when they're looking is make sure that they have an advisor that has had years of experience, has gone through, the good times and the bad times. Also, make sure that their credentials of their license are up to date. So you can go on a site called NMLS. So this is the National Mortgage Licensing System. And if they go into NMLS lookup, they can put in anyone's name. They could put in my name, Pamela Riesenberg, and actually check to make sure my license was up to date. When we went through a couple years ago, the big changes, everyone had to get licensed, everyone had to have a background check, everyone had to get fingerprinted, and everybody had to have credit checks. So a lot of the originators that were in the business that couldn't get licensed, some of them went to banks, because at the time banks weren't requiring them to be licensed. Wow. They are requiring the originators at banks now to be registered, and so they will have an NMLS number. So now they can check those people to make sure that they are fully licensed and up to date with all of that information, because that's very important. The other thing I would check for is ask your advisor where rates come from. How do you get a rate? So a lot of originators may take applications, and that's what we call them, an application taker. But if they're not an advisor, they need to be caught up with their knowledge and up to date with everything, and make sure we've done like CMPS, which is Certified Mortgage Planning Specialist classes, and keeping up to date with all those classes. And so if they aren't sure where rates came from, or they seem a little bit not sure, that you want to make sure they're saying that they come from the numbers will come from mortgage-backed securities and the Fed fund rate. So those two things combined will change the rates on a daily basis all day long. These numbers come out, different numbers will come out regarding unemployment, or regarding the national spending, or housing numbers. Those numbers are going to really affect those two things.
Wow.
And so we want to make sure that, if somebody's watching over rates for you on a daily basis, telling you when you should lock in and when the right time is, then you want to make sure that somebody is knowledgeable in that area.
Great. Good to know. Well,
Yeah.
thank you.
Yeah, no problem.
Thank you. And so why don't we let people know how to contact you? So if anybody has any questions about some of the things that we've talked about, is the best way to reach you probably by phone?
Yeah, they can reach us at the office.
Okay.
My team is phenomenal. I just love them. We just have a great team that's been trained for many years. So they can reach us at 603-893-4100, or they can go to my website, which is mortgagesbypamela.com.
Excellent.
Yeah.
Excellent. Well, thank you very much for joining us.
No,
This has
thank
been
you for
great.
having me.
Absolutely. And if you have any further questions for me, please don't hesitate to reach out. My number is 978-276-2010, and I'm looking forward to getting some fun show topics. So if anybody's got some suggestions, please let me know. And thank you for joining us.